All right, time for the setup. Arista Networks. That's after the bell today. Joe T.
David Tepper, I believe, moved out of position here. Revenue has to come in at around 23%. It already had the DeepSeek sell-off. The CapEx is related to Microsoft and Meta. That's what's important here because it's the adoption of Ethernet capability. That's where Arista Networks is going to benefit in terms of having that networking. One thing to watch out for here is the guidance. What are they going to do on the guidance? If they just maintain the guidance, I don't think that's going to be good for the stock.
Okay, Garmin tomorrow morning. What do you think about that one?
Garmin, you're going to need to have revenue growth and earnings growth come in mid-teen level here. This is a stock that has been appreciating very significantly. Obviously, a very strong momentum name. With that, you have to see the ability of this company to deliver a strong earnings report.
Walmart, Thursday before the bell. Brian Belsky, you own it.
Love Walmart.
Stock's been doing great lately, right?
Yeah, I mean, Walmart and Costco are the only names you should own in staples. We talked about Constellation earlier. This is an expensive stock that's going the wrong way in terms of that. But let's hear more about margins in their awesome business on the grocery side and the e-commerce.
Shack is Thursday morning, Josh.
Looking for revenue up 15% year over year, 25 cents in earnings, which would be up 1,150%. It's a 95 forward PE, but 142% earnings per share growth in calendar 25 is the expectation. So it all sort of makes sense. I want to stay long this name. I've been long since the beginning. It's worked out really well for me. And I think new management is doing exactly what we want to see if this is going to be a company of significantly more scale.
How about Block, which is also Thursday morning?
I'm not in the name currently.
I am.
This stock has...
Yes,
What?
my bad. I'm sorry. I'm gonna give it to Joe. I read the sheet wrong. My bad.
So
Let's give it to Joe.
It showed the early signs of beginning to develop some strong positive momentum. It's kind of teetered out somewhat. On the earnings front, you're going to have to see this company accelerate the revenue growth. Single-digit revenue growth for XYZ is just not going to get it done. Free cash flow generation also has to increase as well, somewhere in the mid 400 to 500 million. Again, insufficient.